Hi guys, welcome to my channel, and I'm your favorite tutor Felix, and today we're going to be talking about IFRS 15. So there are key things that you have to understand about IFRS 15. Okay, so IFRS 15, issued by the IASB, replaces previous revenue standards and applies to nearly all contracts with customers. So you have to just understand that the IFRS, when it comes, it's an update, and you have to also just to try as much as you can to stay in touch and stay updated with all the updates that will be happening so that you might remain relevant. So this standard applies to nearly all contracts with customers, meaning if your business is going to be dealing with customers, you have to find a way of like trying to sit down and look at what is now being required under IFRS 15. So we need a, a single model which is consistent, where we recognize revenue, and this model has to be applicable across board. So the things that you have to just understand is that this IFRS 15 is going to be applying to most contracts with customers, and it's there so that we ensure consistency and transparency. And you have to also understand that it replaces ISA 18 and ISA 11. So I'm not going to get in detail with ISA 18 and ISA 11, and I should assume by now you should be knowing what they're all about, right? So IFRS 15 introduces a structured approach to revenue recognition with 5 key steps, right? So the first step that they have is you have to identify the contract, then you identify the performance obligation. Then after identifying the performance obligation, you then have to determine the transaction price. Then after determining the transaction price, you have to allocate price to performance obligations, then recognize the revenue as performance obligations are met. So you just have to understand that this is contracts in a crux. This is like contracts or contractual agreements in a crux. What I mean is there has to be, like, for instance, the first component, which is identifying the contract, there has to be an agreement. A contract is an agreement between two or more parties. So if you don't have an agreement, there is no contract which exists. So as a requirement, you need two or more parties, and it must have commercial substance and enforceable rights. For instance, a software company signing a licensing agreement. So we need two or more parties. Like, you can never get into contract with yourself, in as much as it is said, and but when it comes to accounting and the real world of accounting, you can never get into a contract with yourself. And you also have to identify the obligations. That is, determine the distinct goods or services in the contract. For example, a gym membership with personal training sessions, or a lease agreement, right? A lease agreement whereby it's stipulated that you have to pay you have to pay the lessor, and you have to pay the lessor at a certain time and stuff. So also you need to determine the transaction price, right? You need to determine the transaction price, being consider the fixed versus variable pricing. You have to consider discounts, you have to consider incentives. A telecom company is an example, which will be offering discounts for bundles. Like, there is a lot of discounts and stuff. You have to also identify, like, in a contract that you might have with a cell phone, like a cell phone producer, there can be, like, what is the transaction price? What is the price that you're going to be paying monthly? That becomes your transaction price. So your ability to identify that component in a contract is going to be very, very important. Fourth one, which I highlighted, which I'm going to repeat again: allocate price to performance obligations, meaning when you pay such an amount, X amount, you are expecting to receive 1, 2, 3, 4, or one item. Like, it has to be some form of exchange. Assign revenue, uh, assign revenue to each obligation based assign revenue to each obligation based on standalone prices. Smartphone plus data packages is one of the easiest examples. When you analyze the transactions that happen there, you will be able to gain a thorough insight in what will be going there. Recognize revenue as performance obligations are met. Revenue, just remember, revenue is recognized over time or at a point in time, right? Revenue is always going to be recognized over time or at a point in time. For example, a construction company recognizes revenue as work progresses. Because you do your foundation, you get payment for the foundation, you start your structure up, there's payment for the structure up. You do the roofing, there's payment for the roofing, etc., etc. Right? Etc., etc. Now let's try to apply IFRS 15 like to real business challenges, right? For instance, a subscription model of like Netflix or Spotify, right? Revenue is all recognized over time, right? Not at the time of subscription. So you might remember, like with these subscriptions, some of them they'll just say sign up. After you sign up, you already have access to their services. Once you have access to their services, you're only going to pay in deferral, like maybe at the end of the month. So you can't then recognize revenue at the time of sign up. You can only recognize revenue, right? Not at the time of subscription, but you can get it later on, you can get it later on. That is one of the easiest one, right? Then you have instances where revenue has to, when you're selling, when the customer actually receives the item, that's when revenue is gonna be realized. It's one other example of like various decisions and things that happen. So it might happen that you have products that you are shipping to a different country, right? So it would be pointless for you to recognize the revenue the moment the money is sent, but the moment the transaction is complete, like the moment the control of the goods is now in the hands of the customer, that's when you can now then recognize that, oh, okay, now I do have revenue, because you still have an obligation to deliver whatever products. So if you fail to honor your obligation, then you create an issue, right? You create an issue. So it's a lot that is covered in IFRS 15 that really needs you to look at it. But you have to also understand that IFRS 15 has revolutionized how companies report revenue, bringing more transparency and comparability. Whether you're an accountant, business owner, student, understanding IFRS 15 is going to help you a lot. So I just wanted to give you clarity, or just wanted to give you a brief overview of what this IFRS 15 is all about: contracts and revenue. So if you do not understand contracts, it will be difficult for you to also go on and recognize revenue, because just the mere fact that the bank account received a payment, it doesn't necessarily mean that you are now at a time of recognizing revenue. So from me, that's it about IFRS 15. All the best as you go and apply it. Remember, if you need another video in this line, do drop a comment, do like, do subscribe. Thank you for your time.